and welcome to SFI Not So Live with me, Jay. It's February, and we're back. It's first podcast of 2023. We've got some great topics for you and some great guests, so let's not waste any time. I'm going to go straight through and introduce everybody before we go into what the podcast is going to entail. So, Tony, over to you first. Welcome. Good morning. It's morning at the moment. Maybe a little introduction for the audience, for those that haven't heard from you before.
Yeah, thanks, Jay. Morning, everybody. My name's Tony Hall. I'm Head of Business Development here at Saffron. My role is making sure that intermediaries feel amazing and get the service they deserve from us.
Short but sharp and sweet. And then we have Mr. Phil Lawford. Phil, good morning.
Morning, Jay. Hi, everyone. I'm Phil Lawford, the National Account Manager for Saffron. I support Tony in looking after our key business relationships with all things intermediaries.
There we go. Thank you, Phil. And our first special guest of this podcast, Mr. Nick Mendez. Good morning, Nick. How are you doing?
Morning.
Representing brokers today. Maybe give a little introduction for those that might not know who you are.
Yeah, absolutely. So, hi, everyone. So, as Jay mentioned, my name's Nick. I work at John Charcoal. My role's split between two parts. So I'm still brokering on the specialist side of things, so doing the second charges bridging and commercial, as well as doing the PR, so with the national press and media. So a lot of the commentary on the economy and the property market.
Very good to have you with us, Nick. And our second special guest of this month, Shakina. Shakina, welcome, representing the media on this occasion. Maybe a little introduction for you as well.
Thank you for having me. Thank you for having me, and good morning, everyone. I'm Shakina Tawahena, Commercial Editor at Mortgage Solutions. I cover the mortgage industry in my reporting, and we go out to mortgage trade press, so to the mortgage professionals in the industry. We write for them and about them, and that's the area that I cover.
Fantastic. What a panel. What a panel for our first one of 2023, and some interesting topics to work through as well. So for the sake of any new listeners, wherever you are in the world, we talk about the mortgage and property industry in the UK as it stands now. We are recording on the 27th of January 2023. So some of the things we say, some of the rates we might mention, or some of the situations we might mention may have evolved by the time you're listening. So based on that, one last caveat. We are individuals, and these are individual opinions, not necessarily that of the businesses that we represent. There you go. Caveated for you guys, so you can say what you like now. Okay, let's crack on. So our first story. I'm going to the national media first off for this one, and I know this is going to create some debate across the panel, so I'm not going to talk a lot during this. But it's regarding the lovely Paul Lewis from Moneybox. Wrote in the newspaper, and various other publications have picked it up, and there's certainly been a reaction in the broker industry, as we'll talk about in a second, saying to avoid local brokers, which if I just say that, I'll keep it at that, and I'll go around the room and we'll give your opinions on it, because I think it stands against everything we all stand against. Certainly on this podcast, we understand the importance and the relevance of local brokers and brokers in general. So, Tony, coming to you first. I know you want to say something, so I'm just going to let you say it.
Well, look, I think for those who are of a certain age will remember Mr. Gerald Ratner, and he's had his Gerald Ratner moment. So if you remember Ratner, he's the guy that likened his jewellery to the same value as an M&S prawn sandwich, and lost all his businesses virtually overnight. It plummeted because of one silly comment. So I just think it's a misguided comment, and you can see, in the article, there's hundreds of brokers lining up to speak to Financial Reporter on this, the one I'm looking at, and just explaining their viewpoint. So. Yeah, I think it's just disappointing. You've got to be careful, because, large brokerages do also provide a great service. So he's kind of upset both. He's upset the smaller ones, independent ones in the article, but then the backlash from the independent ones saying that the large high street don't care is also a challenge. I think everybody's just got to realise that there is a home and a place for great mortgage advice, and it is. Just go on to, as one of the advisors said, just find one near you and look at their rating and go from there. And I think, the beauty of the smaller ones is they're now having to look and support those clients that struggle to find the high street, which would necessarily go to the big lead providing firms or get all the leads. So, yeah, that's kind of my bit. I've calmed down from reading it originally because I just thought it was a bit naughty. But there's a home for everybody. He should have just said get good advice, which is funny enough, Jay. What we always say: go and
And
find a
do you know what
quality.
was really interesting? We just had a Martin Lewis just months ago giving poor advice, poor mortgage advice, or certainly not very educated mortgage advice. Yet he's looked up to and respected as a financial figure point for the media. So Phil, is this just is it just an off the cuff comment, or do you just? Let's be honest. The mainstream media don't really handle mortgage advice or mortgage commentary very well, do they? Which is probably, Nick, we'll come to you in a second, but probably why Nick's quite good to be putting out to the media because he knows what he's talking about. But yeah, Phil, so yeah,
Yeah.
your opinion on it. How did you react when you read the article?
Yeah, I think it was probably an ill thought out comment, and as Tony says, is a bit. He just sort of exploded across our industry. But to be fair and trying to be measured and balanced, he has sort of retracted it, probably slightly clumsily, and he did come back and sort of said, well, it's hard to say in 34 words or whatever what you really mean. So he has sort of climbed down from it. To be fair, but I think the great pity is some of the other bits that he was saying were actually quite good. He was making some other good, valid points, which all that's been forgotten about because he's guffed off and made a bit of a silly comment, really. So let's just. He's been called out in our industry, which is right, and it's the positives are. It gave us a bit of a platform to say, actually, there's some very good small brokers and there's some very good large brokers, and the key point is to get good, high quality mortgage advice. That's what's important, and hopefully that message has got across despite all what's gone on.
Nick,
Yeah.
coming to you on this one. Just a pre-warning for you. Just be careful what you say when you're with the media, from a PR person to a spokesperson. Just on that, I mean, it's ill thought out, yes, but is it not a concern that somebody who fronts Moneybox, which is a big BBC program, has made this level of mistake? The BBC are there to represent the audience, an audience. We pay for the BBC to be there, to be that kind of independent voice. He has got a respected program. It is well listened to. There's a danger here that, consumers that don't understand the work the brokers do are going to be completely misled by this, aren't they?
Look, I agree. I think, as Tony and Phil have essentially mentioned, it was essentially a poor bit of journalism, a lack of understanding of the industry and of, again, the people that are in the industry that give really good advice. Now, when we look at the self-employed market, the people that have got the small businesses, or regardless if it's above a cab shop, fundamentally they're knowledgeable, dedicated, and they're essentially the most experienced in their field. They've built their business after years of trade and essentially gone out on their own. The other part, when we talk about self-employed, is typically they are ARs of a network, so they still have access to the same products as those that are the large networks and the DAs, so the ones that are directly authorized. There's two parts here which I think is really important, and which I sort of wanted to mention was, although you've got a large brokerage that's got a bit of history behind it and reputation, fundamentally, the ones that are self-employed are the ones that have been in the industry for a longer period of time. The people that go in as employed that work at the large networks, fundamentally, they might be new to the whole market. They might recently pass their CMAP. Likewise, they're new to providing advice and they haven't got the overall landscape. So just because you're going direct doesn't necessarily mean that you're going to get a better level of service than if you went to someone that's small. Now, again, I'm speaking openly here, and I'm still saying it's still important to reach out, but fundamentally, I think it's really important that as an individual that works in the industry, you've got to promote and share the voice of all. And I think that's really important. And because when you've got people, Jay, as you mentioned, people like Martin Lewis they do a fantastic job at speaking around a number of financial products where, especially in a country where there's an array of different options and people potentially now aren't as clued up potentially as they were previously, but they've got the ability to communicate a message across a range of platforms and to a huge audience. Yet when they do talk, people do follow what they say, and essentially a client and potential homeowners can get the wrong advice. So if they don't speak to someone that has professional understanding in terms of their circumstances and to give the advice, they could be losing out, quite dramatically when it comes, especially in the times of living. So, look, in terms of going back to the point of, in terms of the comment, yes, absolutely, it was poor. I think it's very easy to pit the small person against the big person and so on. But fundamentally, the self-employed and the smaller businesses have got play an important role within the community.
Skinner, I'm going to come over to you. You're in the media. I'm not going to ask you to just say too much about Paul himself, but just for a piece of advice that I've given on quite a lot of these podcasts, and I've always said, as somebody who works with the media, is for those consumers looking for mortgage advice, go to a mortgage publication targeted consumers, and read those publications that are right for you. So, because the mainstream media has this danger of influencing, as Nick was just saying, influencing opinion and thought and considerations. So there is a real need here for people to know where to look for this kind of advice and guidance, because otherwise they are going to get the wrong decisions. So media like yourselves, I presume, are vitally important to retain that
Yeah, of
balance.
course. And obviously, there are a channel to get that information out there, because mortgage brokers themselves, lenders, and anyone who is in the industry doesn't always have that connection or that ability to get the word out there and give the advice and lead people in the right direction. So it will be the journalist where people hang on to their every word, listen to what they say. And I think another problem that I saw people raise was that he didn't really explain or go into detail as to why he said that. It was sort of just that one blanket statement, and that was it. He left it at that. And so you can't even defend or really agree or disagree or see where he's coming from. There's not really anything behind it. So there's nothing really to argue against except just to disagree that you can't say one way or the other is correct. And also just going for a mortgage is a big decision. And if your local broker is who's accessible to you, not every community is the same. Not everyone lives in a big city. We could go down the high street to a large mortgage broker chain and walk in and find someone. So sometimes it is your local, smaller, independent broker that you can access. And so to shut that option off might shut off your access to a mortgage potentially, or lead you down making a wrong decision, or just making a decision that you might regret or maybe wasn't the best. So it can cause a lot of issues. And is with these journalists, they use emotive language, which, I mean, speaking as a journalist myself, I know that sometimes emotive language does get attention, but sometimes you need to go a bit further behind it, explain why and explain the reasons before you just say things, because this is a big decision for people. It's a big financial decision. So you can't make blanket statements with no further meaning behind it or explanation behind it.
And I have to say, when it comes to my financial advice, I like to sit in front of somebody. I actually do. I do like that thought. It's a personal thing. I know not everyone's the same, but But then we look at advice, Tony. Let's go. We're going to talk about self-employed a little bit later on in the podcast. But you look at advice and what poor advice was given. If you'd listened to the mainstream media, and many people did during the pandemic, taking out the grants and the bounce back loans, which has now started to really affect people getting their mortgages. They were told to do that. The mainstream media's message was, get the support, it won't hurt you. But as we know, Tony, it's now kicking people in the guts trying to get a mortgage being self-employed.
Yeah. Oh, yeah, 100%. It's, the media. Look, you guys, we have media on the screen, so I'm not going to go into my views. But look, never let the truth get in the way of a great story. Do you know what I mean? That's an age-old adage, and sometimes that truth can be stretched, and it sensationalizes issues. It isn't in our trade press, in my personal view, but it is in the mainstream reporting media of the BBC One or ITV. It's all about shock and awe, isn't it? And that has led to some fundamentally poor comments being made that's led people to, as I said, react and have inappropriate outcomes. And we're thinking about consumer duty just round the corner and all about quality outcomes. There's quite a bit that the media could do that actually influence a poor outcome. So, yeah, I agree. It's go and they should just, I don't want them saying it, but they should just always leave it with go and find a suitable professional. There is so many websites where you can find a professional, or go and ask somebody, have you used somebody that you trust, and then Google them. It's
Can I say something here, Nick? I'm not going to make your head too big, I promise. But it's people like yourself, Ray before you, all these people having brokers in the mainstream media needs to improve. It needs to build. It needs to be stronger. The amount of times I watch watch news reports, or read articles. I'll say it right, in the mainstream media that has absolutely no broker representation in there at all is an absolute farce, as far as I'm concerned. And I will keep petitioning. I do all the time. I'm always offering people to the media. They will eventually jump and take it. But Nick, the work you're doing for the broker community, thanks, because I think you're going to probably help away the line and prevent things like this happening, because we need to counter that argument. Okay, we're not going to dwell on it too much because it's a bit of a nego, isn't it? So let's not dwell on it too much. But thanks, guys. That was a nice one to go to. If you want to, we were talking about the responses. They were found on the Financial Reporter website. So if you want to Google it, have a look, and you can see the responses from your industry. Staying with Financial Reporter, moving on to a completely different topic, one of our favourites. Let's talk buy-to-let. It's a weird topic at the moment. Landlords are not quite getting the amount of love that they used to get. It's not the best market for landlords. So that's where we're going to stem to with this conversation, rather than just talk about products. But it isn't the nicest environment. Nick, I'm going to come to you first. It isn't the nicest environment for landlords at the moment, which, being a Conservative government, we're normally they're very keen on this. It's normally well supported. They just don't seem to be getting that support. There's a lot of legislation coming out, a lot of things changing. If I was looking in, I don't think I'd want to be a landlord right now. What do you think?
Look, landlords are absolutely under facing scrutiny in all directions, unfortunately, at this moment in time. In terms of legislation changes, whether that's partially to do with an election in the next year or so and the amount of tenants trying to pick up more votes. But absolutely, when you've got a Conservative government and you think about where they promoted home ownership and entrepreneurship in the Thatcher years and so on, it's sort of completely changed. So, look, landlords essentially are facing an array of they've got the ICR limitations with lenders, they've got capital gains tax, EPC potential in 2025, likewise the rental reform bill, and that's not to say further restrictions in the future. There's no doubt landlords, depending on where you are in terms of location, will be looking at either diversifying their portfolio, looking at commercial, or even switching a lot of their buy-to-lets to holiday lets, depending on the location, where the legislation's a lot less stricter. And fundamentally, that's only going to do one thing, which is going to push up less properties on the market, and rents continue to go up. So, look, there's going to be a number of things. And when I was looking at, in terms of, essentially, landlords play an important part when it comes to the social economics of property within the UK, especially when there's a growing dynamic. I was looking at some of the stats recently, and there's government data that highlighted that 65% has increased of those that are older 65 and above, privately renting has increased by 38%. Likewise, those between 35 and 44 increased by 21%. So it just shows that the rental market isn't just around first-time buyers and a certain demographic. It's growing. It's becoming a fabric of the communities in which we live in. So, look, fundamentally, in terms of the question, yeah, absolutely, we need to do more to support landlords if we want to continue having the housing because we're not building enough. And likewise, yes, we've seen different schemes and Help to Buy, and got new things like Help to Build and so on, but they don't go far enough. But that's that, yeah, and unfortunately, rents as part of that, as we've seen from RICS and so on, they continue on the increase regardless of what's happening at this moment in time. So, no, there's definitely more that we should be doing to support landlords. But I do feel that there's probably elements of the time of where we are at the moment, that pressure is going to unfortunately still continue over the next year or two. And it's going to make it difficult, whether it's coming to remortgage or even looking at purchasing. That's for sure.
Phil, I'm going to come to you in a minute, because we're going to talk about house building in a second. I know that's a topic you love as much as I do. But Shakina, just coming to you quickly from a media perspective, and the sort of stories you're picking up on and the people that are approaching you. Is there, the market's quite buoyant still for buy-to-let, isn't it? And there still seems to be a market out there. But is there a feeling of negativity across lenders, brokers about where it's going?
There is a feeling of negativity, I guess, from the economists. They're saying that the cost for landlords will exceed the cost will exceed the rental income and things like that. And there's always talk about exodus of landlords, which is something that has been said for a number of years through all the different policies and changes to the sector anyway. And we haven't really seen any mass trend of fall off in rental properties. But even so, there is that conversation happening. And I think lenders are trying to support them. So there have been changes to stress rate calculations, ICR calculations. Rates have come down for all borrowers, including landlords. And there are also some products that are allowing landlords to switch from variable rates to switch rates with no fees. So they are trying to do what they can, but within parameters of what they're able to do. So whether that's enough to entice people to stay in the market, or to entice people to keep their portfolios as they are and not change anything, that's yet to be seen. I do think the next year or so will probably tell us what might happen, because it will be the higher rates that probably determine whether people decide to make decisions with their portfolio and whether in the market at all. So that might be when we start to see people make those big decisions. I'm not sure whether it will be like a massive difference, but that might be what we will see in the market. But it's quite hard to tell. Some people might ride it out with the costs and everything, dip into their savings or whatever, but some people might not be able to, and that's just what we have to look out for.
Tony, Phil, I'm coming to you in a minute. Tony, I'm going to come to you about products. Phil, I'm going to come to you about the properties. But Nick put his hand up,
Yeah.
so I'm going to quickly go to his opinion on what Skeena was saying.
No, that's it. It's just exactly on the back of that. And it's very much a case of, look, when we talk to landlords, there is an element that they do need to adapt as well. So what you often find is with your portfolio landlords, which have got experience within the field, often they don't leverage up to 75%. They typically, try and go to the 60, around that sort of, because again, they've been in historic times when rates were high and they have sort of faced these sort of issues, where what we found is with your smaller landlords, which especially in the last few years where rates have been at all-time lows, that maybe have one, maybe two properties, fundamentally they've essentially tried to buy as many properties with as little deposit as possible. And now when they're coming out of their fixed rate deals, they're finding that actually they're in a position where it's going to be a bit of a struggle. So as Shakina mentioned, it's about trying to adapt and maybe make overpayments and look at different ways in terms of trying to borrow less. But fundamentally, it's not just lenders that need to change. Essentially, it's a wider scope of landlords as well.
I agree. Tony, Shakina mentioned that lenders are doing what they can to support. I've seen certainly quite a lot of articles of across the lender spectrum. Tell us a little bit about what you've seen and what can be done to help those landlords that are sitting on that borderline.
Yeah, look, the biggest thing is the ICR is actually having the rental yield that pays for the stress related calculation, and that's where the biggest problem is, because anything over 5.5% on depending on the lender's ICR calc, and a majority will be in the 140, potentially 155 mark, you just can't get the figures to add up, so you can't borrow enough to take out the loan that you want. So we're in a bit of a more fortunate position, because our calc's at 125, and that's and a pay rate which 547 ours is. It is working. It is kind of helping out. But what lenders are doing is, rates are coming down anyway, so I think that challenge is going to die off a bit, because the rates are dropping sub 5 now, seems to be. So I think that's going to ease. Lenders are, and we're trying it, are looking at lower rate, higher fee to try and help landlords overcome the ICR barrier. The challenge you've got though, and I think yields in London are like 2% at the moment, so there's no way it's going to hit a calc. So there's only so much lenders can do. I think that's why a lot of certainly a lot of deals that are coming up for Remo are product transferring, because actually they can't move somewhere else, and lenders are doing their best to support them. So we're doing what we can, but ultimately, commercially, we have to make money. We're not a charity, so we've got to do something that's right for us. But we're still big supporters of this market. And look, it's like any market; it has its pluses and minuses. I think those with one property or going into it the first time, I think you've got to think really long and hard about whether you want to do that. But if you're a portfolio landlord that's not too highly geared, I think you're probably going to do all right out of this, because there's going to be a lot of properties coming onto the market cheaper. Okay. I know people saying, I'm going to put my rent up because I've got to cover it. But actually, is that the right thing to do? I know the article talks about that. Is it better to have a tenant that pays slightly less but it's going to pay you, as opposed to one where you're going to hike it up and take the gamble? So I think that's what lenders are doing. One other interesting thing that we were talking about the other day is we're hearing that Scottish landlords are now buying in the UK in the north because it gets over the rent freezes they're seeing in Scotland. So that's an interesting dynamic as well. So there's always an opportunity, isn't there? In a cloud or in a sunshine, there's always an opportunity.
Let's face it, portfolio landlords are clever business people. They're going to look for opportunities and they'll grab it. And I don't blame them. That is not me dissing them. Go for it. But again, we mentioned it with Nick. It's always been the way of Conservatives to hike up buying houses. Look at this and get into business, do everything you can. Phil, we have this conversation. I know you and I have a very strong opinion on this. I'm going to come to you knowing exactly what you're going to say. But it's systemic of a wider housing problem, aren't we?
Yes.
We're in a housing crisis. Let's face it. I mean, I don't use the word crisis often, and I'm not trying to sensationalize like a journalist in the mainstream media, as we've discussed already, but it is a bit of a problem, isn't it? Because we've got people who need a rental market, a lot of people who want to get into homes, a lot of first-time buyers who can't get into homes. We seem to have this like churn. How can we fix this? What can we do? What is the issue?
Yeah, I think the biggest problem is in this country is housing stock or lack of it. It's just simple supply and demand. There just isn't enough, from social housing. It's not been there. It's probably not been a priority for successive governments. So it almost needs to be depoliticised, and we need a long-term 30-year house building strategy, really, to solve it.
But they keep changing the damn goalposts.
That's right.
They have targets, they never don't hit them, so they bring the targets down and don't hit those, bring them down even further.
Everything's thought in 4-year, 5-year cycles for the next election. That's never going to solve the problem, unless you have a big moment like, sort of post-war Britain or whatever. You're not going to. It's not going to change. So something big and brave needs to happen to fundamentally change it. Otherwise, we're always tinkering with it. But back to landlords, whatever your views are, the private landlord sector is a really, really important component of our housing market. So if you bash landlords too much and beat them up too much, that's not going to help either. And that was probably one of the less thought about consequences of all the Liz Truss quasi-Carteng debacle is, everybody thought about their own mortgages, but what about rental properties? Because landlords had to put their rates up as well. So, but there are. I know a lot of lenders are looking at top slicing. That's something we're looking at, which can help. And it's not all bad for landlords because the capital appreciation is still there for them over the long term. Property is still a really good investment in the UK long term. It's not a bad bet. So it's not all down, but it's a bit turbulent at the moment.
I was watching a news very quickly. We'll leave on landlords in a second, but I was watching something yesterday about ghost landlords. Did you see the story yesterday? It's in the House of Commons. I wasn't sure if it's the House of Commons yesterday or today, where a building owner is not the landlord. Somebody rents the entire building out, converts it into smaller places sometimes more affordable, and rents out. But when you then have an issue like a flood, you don't know who your landlord is. So people are like, I can't complain. I'm stuck with this flood, but I don't know how to do it. I don't know how to fix it. And the poor building owner is going, no, I gave this responsibility. It's all a bit of a mess. But it was a really interesting story. But what I found really interesting by it is the actual landlords, because they're taking these huge buildings going, well, why do you need a flat that big? I can make 2 flats out of that. And so all of a sudden they were making really affordable first rentals out of these buildings. So actually I looked at it and thought, all right, procedurally it's not right. If you've got a leak or a problem with your home, you perhaps don't know who to go to. But actually those companies that are renting out those buildings from the landlord, from the building owner, are actually really, quite ingenious and quite clever about what they're doing. And they're not creating hellholes, but obviously there have been problems. Otherwise the story would have been out. But interesting one to watch. So if you ever see that, I think it's in the House of Commons today, if I'm right. Okay. So it should be in the House of Commons today. So I'll look out for the story and I'll share it on my socials. Anyway, we'll leave that. And let's go on to something that I'm becoming more and more passionate about now I'm self-employed. Don't have to worry about a mortgage, as everyone knows and hates me for. I'm not going to repeat it. But I'm never moving house, by the way. You know, these people that are stuck in houses, yeah, that's one of them. That's me. Never going to move out of Norfolk now. So self-employed. Tony, this is a lovely subject for us, isn't it? We love talking about self-employed people, but we are picking up on this because it's an affordability issue. And I heard somebody on the mainstream media, we go back to it, calling it a self-employed affordability crisis. That's that word again, and saying, you know, it's not great, and it's not been. But is it as bad as this article's making? This is from Mortgage Solutions. It's from Lana. So yeah, what is it in your opinion? What's it really looking like for self-employed right now?
Well, look, if you read the article and you know MBT, I do value their comment. They're really good guys, and they've got, you know, this is coming from tens of millions of search results, so it's statistically quality. But you know, self-employed is only 65, but the whole market's only 71. So look, let's put the context of 6% differential. It is getting harder for everybody. Funnily enough, things are more expensive now. So lenders are tweaking affordability models to time with a funny thing called responsible lending and affordable lending to reflect the cost of living. So yeah, it is going to get a bit harder. For the self-employed, it's never the same as the high street. We know that there's an inequality there. There always has been. I'm sure there always will be. But there is also huge opportunities for the self-employed, again, by going to see an appropriate broker who understands the self-employed market, who understands lenders like Saffron that take a very balanced view as to how we can support. You know, and it's a real focus area for us, and every time we review our criteria, we make changes to support the self-employed. So the latest one we made was we now allow a self-employed director that owns more than 50% to use share of net profits as well as salary in the income calculation, whereas we never used to. So we tried to make self-employed as easy as possible. And obviously we're out there still at 90% loan to value for the self-employed with 1 year. So we're doing our bit, and we're one of, you know, a number of lenders that are out there trying to support this market. So it's not always going to be a yes. As you can see here, 35% of the time we're going to say no, but actually we're saying yes more than we're saying no, and that's a positive. I think that's my kind of view. You just got to, again, find the right broker to help you.
Well, that's clued up nice. You knew I was going to Nick, didn't you, Nick? Coming to you from an industry perspective. How is the market looking for the self-employed? You get a lot of disappointment out there, or is it actually a little bit more optimistic than perhaps we're thinking?
Yeah, absolutely. Look, I think, as Tony mentioned, fundamentally, it's about one, finding the right broker that understands your circumstances. It's very easy to go when we look at towards essentially to slash or bash the self-employed and say it's not going to be possible to get a mortgage, when that's completely incorrect. When we look at the report itself, fundamentally, there's only a small margin between the two, and as Tony mentioned, you know, there's lenders are looking at the cost of living. You know, typically when we look at ONS stats, you know, we've seen them go up. Sometimes lenders would maybe update it once a year, whereas probably now it's more closer to either quarterly or 6 monthly, because fundamentally costs have gone up. Yes, they're coming down, but they're still, when you take into account rates, you need to ensure that it's affordable. When we look at, you know, employed, you know, yes, there's lenders with criteria that will take into account, you know, the employed income, commission, bonus, overtime, and so on. But fundamentally, there's still people like Saffron and other lenders out there that will take into limited company salary and dividends, or net profits, retained profits, before or after corporation tax, or even if you're sole trader, average of the last 2 years or the latest year. So fundamentally, when it comes to self-employed, there's an array of different options when it comes to criteria, which a broker that understands your circumstances, has got the experience, will be able to establish these areas and what will be most appropriate. So the idea that self-employed can't get a mortgage, or if you're a director with ownership of, you know, 22 or 25%, that you can't, you know, it's difficult, it's completely wrong. And you know, you've come across this previously, and I think it's very easy to sort of look at one segment and then go, oh, because of 6% difference, they're finding it harder. Now, don't get me wrong, sorry, I'm going to go on a bit on a tangent here, so I hold my hands up. But you know, there were times during the pandemic where, yes, absolutely, self-employed were targeted, in my personal view, wrongly. So I don't know if we could name and shame lenders, so I'm just going to call it the Anton Deck Bank. So I so
We all knew straight away. Go on,
so,
carry on.
so I had a client that had a large, well-known theme park, and they said that it's a seasonal business. Well, fundamentally, or they were impacted, but fundamentally, as a theme park, they're typically open during the summer period, whereas during December time, yes, they're still open, but part of the attraction is closed down while they do maintenance. It's fun, but they, in their view, was very much a case of, oh, they're not trading, so we can't give them a mortgage. The director. So it's that sometimes lack of understanding. And don't get me wrong, I appreciate sometimes with self-employed, there's a layer when it comes to underwriting where it takes more time, and about understanding the circumstances and the business, which probably why building societies are more suited to self-employed than let's say your high street lenders, which don't essentially are just looking at the very vanilla and want to get it through. So look, self-employed, when you speak to the right broker, fundamentally you can still get a mortgage. You're not restricted by affordability calcs. It's just essentially finding someone that will understand your circumstances and align you to the right option.
There we go. Thanks, Nick. Skeena, I don't know how you're going to follow that, but Skeena, I'm just going to come to you from the lender perspective, wider lender perspective. Tony's had a chance for his blatant plug of the podcast, which he does so well. But just looking out to other lenders and the commentary you're getting and the conversation you're having with other lenders, there's a positivity through them as well. I mean, Tony mentioned the changes Saffron's made, but they're not the only ones, are there? There are a lot of people out there to support and
of
drive
course. And I did want to sort of echo what Nick and Tony said, because it is opening up, especially when you compare it to the very recent history of the pandemic, where certain borrower types were sort of shut out of the market, and that included the self-employed. And then even when things started coming back to normal, there were still a few barriers in terms of how much they can borrow and what kind of records they were looking at. And so things have opened up since then. They're a bit more closer to normal. And no one's ever going to be eligible for 100% of mortgages. It's about going to the right person that can find you a solution. Lenders don't seem to be very transparent right now about what their decision is behind which kind of borrowers they are sort of putting more policies on top of. But I think the general understanding is that they're trying their best within what they are able to do and their risk appetite. And I guess the self-employed, which isn't a new trend, would always be seen as a little bit more risky than someone who is fully employed, just because of the complex income and the differences in trading years and everything like that. So it seems to be that they are, I mean, to be on the side of the lenders, they are trying their best, and we have seen a lot of them easing up on their policies and criteria to try and help the self-employed. But there will always be those frustrations when you probably want to choose a certain lender for a particular rate, and then you find out that underwriting or that affordability just doesn't pass through. But by the looks of it, it seems like they are trying in a sort of uncertain circumstances, but it does seem more favourable now that things are a bit more back to normal, especially compared to the last 2 or so years.
Thanks, Skinner. Phil, just to finish this conversation off from a broker's customer perspective, so I'm a self-employed. I'm not looking for a mortgage, so don't come chasing after me, anybody. If I'm a seeking a mortgage, self-employed. It's really about, Phil, giving all that information, is it? As Shakina was just saying, the flexibility, and Nick as well, and Tony, is just providing all the information you need to get the success that you need. I think a lot of it is down to understanding what can help that application process. And I think the brokers need to really rein in as much information as they possibly can from their applicant. Is that all right?
Yeah, absolutely. I mean, a good broker, as I think Nick and Tony and Shakina has all said, won't recommend a mortgage just on rate. It will be about their circumstances, and they'll find a solution tailored to suit their circumstances. And I think we say it on every podcast, but we've done quite well. We've not said the words yet, but for the broker's point of view, the big advice is to tell the story, tell us the circumstances, use the notes on our portal, so you can tell us all those little nuances, because of the underwriters. Underwriters don't, they're not mind readers, so they need to know all the detail.
Tony, I had a wave.
Yeah, so thanks. I just wanted to come back in on that, because the other thing I want to implore brokers to do is know the lender's criteria, okay? Because that stops an awful lot of heartache. Case this week where the broker put it in, thought it would fit, hadn't checked, and then got upset when we said no. And it's a clear no, and we've never said anywhere in any of our criteria or any sourcing system or any comparison site that we do this particular type of lending. So I implore them to use all the sources available or ring us up before putting your client to effort. And that's certainly a big feature of Consumer Duty. One of the questions is you should not be knowingly getting deals for customers that you're never going to lend to, and brokers shouldn't be putting cases forward that they know the lender's never going to say yes to. So use the stuff available and don't just put anything in that you think is going to make the dip say yes, because we're not silly. We will find it, and unfortunately we're going to disappoint you. So that's just a plea there, really.
Wonderful. I think we'll leave self-employed there. We do cover self-employed quite a lot. If you want a really good self-employed conversation, look back on I think it was in December. Yeah, it was December of SFI Not So Life. Have a look back on Apple Music or wherever you get your podcasts from. Have a listen. A really good conversation about self-employed. Really nice. Not going to dwell any longer. We're going to move to our older end of the customers. We've got a lot of stories, actually. I picked on this one from Mortgage Introducer because I like the title, because it says Rio Grande at the start. I thought that was quite clever. But it's talking about retirement interest-only mortgages on this particular one. But I want to open up to the wider conversation that the cost of living is causing people to look at extracting some of the money from some of the equity to survive, which is never a nice thing to do. And it has been all across the mainstream media. I heard an interview just yesterday talking about the same thing and looking for opportunities. So, Tony, Rio is not something we talk about very often, is it? Well, we haven't had a reason to talk about too often, but it's a product you have in your portfolio.
We're active in this market, and we have seen it pick up. But I think this article is clever in that it talks about an interest and an uptick for it, but only for a certain segment of the market, the high net worth. All right. And the reason the high net worth it works for, or higher net worth, is Rio has this little thing called death stress on affordability. Yeah. And basically, lender will kill somebody instantly and make sure that the loan is then affordable for the remaining person. So for most people in this scenario of cash strapped, looking for help for cost of living, Rio is still not, sadly, going to be the answer, because you have to be able to afford to cover the interest. Okay. Now, there's no end date, so you continue to pay that interest until you no longer need the house. Either you sadly pass away or you go into long-term care. But you have to service that interest. And unfortunately, that's what probably stops a large proportion of Rio mortgages ever continuing, because they just can't get over the hurdle of living on one income. So high net worth, I get it, and that's a really good angle. This is where you've got this juxtaposition between Rio and later life, and then equity release. And obviously, we've seen equity release hit 5.6 billion last year, and that is because people are borrowing more money to live on, but also borrowing more to support intergenerational lending. So that's a big area. So we like Rio. We've got two derivatives of it. The challenge is getting someone over that hurdle of affordability. Now, for us, actually, if they don't meet that hurdle, then we have our other products, our lending into retirement downsizing, or the fact that we don't have any maximum age on our mortgages. It's all based on an ONS mortality table. So we can do a loan for somebody based on their age and circumstances, which helps. But for a lot of people, equity release is the appropriate solution. And the challenge now is equity release in Rio or the mainstream market is very similar in its approach, because you can pay the interest on equity release so it doesn't roll up. You can do overpayments to keep the capital low, and you can stop paying the interest when you want and see roll up, whereas you can't do that with a Rio. So I'm probably boring all our listeners now, but it is, having worked in the equity release world as well, and been with one of the first lenders to launch Hodge, I'm kind of passionate about this market. It was a great idea, great opportunity. It's sadly flawed in its construct, quite rightly, because it's got to be affordable. I think that's the challenge.
Well, I learned something new about products there. Thanks, Tony.
And the only other thing is, the challenge between equity release and Rio is you can do a Rio at 50. You can't really we could do an equity release at 50, but the loan to value probably will be so low because of the length of time you're going to live for, but hopefully, that you can't do it. So that it is a real challenge, but it's an area that we as Saffron are looking at as a whole market because it's a growing market.
Nick, in your experience as a brokerage, what is this article reflective of what you're seeing? Are you seeing this increase? And is it high net worth people? I mean, it's certainly saying it is. Are you seeing the increase, or do you think it's just, it's just more than it was previously? It's not anything to really write home about.
Look, no, I think Tony's sort of hit the nail on the head in terms of what a Rio is, and essentially it's a great product. People are living longer. People, in terms of, are potentially downsizing, and they're looking to release money, or they're looking, and equity release is always that one option. But depending on your age, you can't probably release unless you're extremely ill, from my understanding.
Yeah.
So if you're not healthy, the more you could raise, basically. So, which is understandable. But I think, fundamentally, we've got to look at the reason the Rio product came into play, and from my understanding, it was very much a case of when we think about the old interest only and endowments and things on those lines, that essentially there was a gap whereby people were living in their property and didn't want to downsize, and the endowments didn't cover what it needed to cover. So the Rio was a great product because it helped fill that void. Naturally, there are limitations to it. So yes, on the surviving party, it's stressed on, and there are certain lenders that do take into account or look at ways in which to overcome that, whether it's Live More doing insurance policies, top ups, and things on those lines. And the fact that more people, as we alluded to earlier, when it came to buy to lets, a growing demographics of people older now in retirement that are renting, which potentially can look at purchasing their own place. So yes, Rio's got its positives to it, but overall, the fact is, with most lenders, they could go up to 88 at point of application, and likewise, minimum property values could be 100,000. Whereas if you try to do interest only products, you often need a bit of equity within there. So look, I think the Rio, unfortunately, is only going to service a particular type of client. Fundamentally, that's what it's going to come down to. It's not going to be available to everyone. It's a good product, but can it be developed? Absolutely. I think there's ways which lenders probably can look at it, and I think it's probably going to be one of the areas, especially where we're looking at people that are living longer and taking mortgages. We're looking at state age going up and working longer and doing potentially interest only as part of the forbearance, in terms of lenders looking at ways of which to make loans more affordable. I can see probably 40 years down the line, there'll be interest only becoming, I hope it won't become a the default option, and repayment will still be there. But I think as time goes on, we can see more interest only products becoming in play. And then, unfortunately, if people don't want to sell the property, if they haven't got other ways of repaying that interest only, Rio's being the default option later on in life. So it's a product which I believe will be around and will continue to develop. But at the moment, unfortunately, there are limitations to it.
I agree. We won't stick on the Rio for much longer because it's just one product, but just on the cost of living, Shakina, because you can give us a bit more of an insight, hopefully, on this too. But I was having a listen to some of the news reports, and it seems like prices. Nick, you mentioned this earlier. Prices started to come down. Fuel costs already come down. Now looks, as in driving fuel, our home energy costs are looking to come down in April. They could actually do it now, but they won't. So our bills will start going down. So we could be seeing the end of the peak and maybe a downward spiral in the cost of living crisis. Is there any other good news out there that could mean that these poor people don't have to take out a Rio mortgage to take the equity out of their home? Are we seeing some positives coming
like
through?
you say, the cost of things seem to be settling and people are managing with what the price of things are for now. But I'm not sure that it's going to get any better, not to be negative, but I'm not sure it's going to get any better anytime soon. I think it will just level out for now. We have to wait for a little while. But I think what might prevent people from having to take money out of their homes would be that they wouldn't want to borrow more, or maybe if they borrow somewhere else, they can't borrow more. I think people just want to limit the amount of debt that they have and maybe save it for later if they can, push it down to a time when it's a bit less desperate if they're able to. But I think for now, people will be quite settled. I'm not sure that the market will keep rising. It might level out at what it is now, but as for keep rising, I'm not sure. I was actually talking about this in the office yesterday, about whether, it's sustainable, the growth in the market, because a lot of it was based on need and based on rising house prices, with house prices set to fall, costs coming down. That need might not be there anymore. That sort of will to make the most out of the gains on the house prices might not be there anymore. So it might not to be negative, but some of the steam might be coming out of the market in that sense. But not to say that there'll be a downturn, but just not necessarily carry on in its upward trajectory as it is or has been.
Nick, you waved at me.
Yeah.
Did something
So, sort of on Rios, but I guess when we look at, as everything that's been mentioned about property prices, cost of living, and so on, one of the things that we've seen at JC, so John Charcoal, is around multi-generational living. So I'm
Yes.
not talking about um, children in their 20s and 30s living with parents. It's actually in reverse, whereby parents actually selling their property and then using their purchasing power to buy somewhere larger where they could live, with, whether it's an annex or whatever, bigger property which suits it. And then that way, when it comes to later on in life, they're essentially passing that wealth down a lot earlier and so on. So that's one area which we're seeing a bigger conversation happening about, not so much joint borrower sole proprietor, but very much the case of going, right, if parent sales and grandparent sales and move in bigger places, to try and overcome everything that we've mentioned. We're seeing more of those conversations happening, and it'll be interesting to see what lenders do to sort of assist that potentially in the future as that those trends start to grow.
Yeah, a lot of our inquiries we're seeing on the Rio and the later life space, because we do a later life product as well as a Rio, is parents wanting to raise, or grandparents want to raise money to help their children or grandparents onto the property ladder. That's another common thread that we've seen a lot more of, since the start of the year.
so?
I just wanted to come back on something that just literally back on the Rio around the stigma around borrowing money later in life. We're still, thankfully, hopefully, it's my generation now, mine and Phil's in our early 50s, about still this desire to clear our debt as soon as possible. But I think as time goes on, people are going to get used to living with debt forever, and just transferring it in different ways, because there's this real stigma about not wanting to borrow money, but then living in abject misery when you've got a huge asset there, and worrying about borrowing money. And I always say to people, you're not borrowing money. The money's already there. It's just in an illiquid, intangible house. You're just moving that to cash. You're not borrowing it. You're just switching its usage. So, and there's a cost for doing that, and that's the interest you pay. So I think there's some education to do with people in that later life space, and with Rio as well, to get them to truly understand that don't live in misery or in a lower standard when you don't have to. That's a real industry message that needs to get out. Now, yes, it has to be appropriate. We don't want to be lending people money for no reason, but if you need money to supplement, or you want to pass on your living inheritance now to see the benefit of it, then just do it. That's my advice. That's what I say to my parents anyway. Just bloody spend it. Enjoy it.
Have you seen the state of inheritance tax? And I got my inheritance through. I was like, actually, mum should just lived a life a little bit longer and enjoyed herself and partied a bit more, because I didn't get any of it. Let's move on. That was really good topic, guys. Thank you, guys. To something that is a really important topic, and a complete coincidence that somebody on the panel actually influenced this report I'm about to talk about. And actually, someone else on the panel, young Phil, is responsible for this and has been paying attention to this. So we're going to be talking about as I call it, DE&I, in the mortgage industry. Diversity, inclusion, and equity is a very big focus across the entire of society. It's becoming a driving force. Business are paying a lot of attention. ESG is a huge element of investment in business and moving in business. And we've often said this, and not on the podcast or on webinars, but talking to each other, that the representation from subgroups of society across the mortgage industry might not be as reflective of what society actually looks like. So this AMI Viewpoint, which is sponsored by Alderman and Virgin Money, is a report on that. It was out in October 2021. Nick, you will do it more justice than I will. So do you want to give just a little background into how this report came about before we go into the nitty-gritty, as it were?
Yeah, definitely. So essentially, the report was on the back of conversations where people had experienced certain incidents within the industry, whether that's at events, networking, and so on. And there was a growing concern that essentially there wasn't anything light being shone. It was very much hearing through hearsay and so on. So Amy did essentially a report in line with IMLA a few years ago, and the report unfortunately was highlighted a few things which are wrong with our industry. To keep it, without in a nutshell, whether it's to do with the events, recruitment, pay, and so on. So essentially, following the report is very much a case of, right, how do we move forward now? What do we do from now we've had the report? What can we do to make a change? And essentially, that's when a task force was essentially created, where we were going to look at 3 different areas. So you had recruitment, pay, progression, and retention, which was headed up by Tracy Burton at HSBC. Leadership and culture, that was leaders on that part was Alison Houghton Coldfield from Master Private Finance and myself in terms of experience with the industry. So that was events on that side. So essentially, because fundamentally you can't just make change, you have to bring everyone on board. And if people don't understand that about the unconscious, I don't want to go into too much on that stuff, but I guess the unconscious bias and things on those lines, especially the leaders that are in the industry that own the brokerages and things on that are essentially a certain type of demographic. So unless you change the mindset there, fundamentally you're never going to make a significant difference because you need to get everyone on board. So it's very, from my perspective, is that when I came into the industry, I've been in the industry for 15 years working across high street lenders, head office and corporate and things on those lines. There's always limitations that I always felt I had to work harder and things on those lines. So it does mean something to me in terms of being involved and making a difference. So essentially, the report highlighted all of these things which people, regardless of your background, which are facing, and to really make a difference. So the task force was created. We had the website Working in Mortgages, which essentially cover these type of areas to really help when it comes to recruitment. What to look for, how to not judge, and things on those lines. And in terms of retention, because the part, especially with our industry, a huge part of our that give advice are self-employed. And fundamentally, when you look at their journey, they went to self-employed because when they're at the brokerages, they didn't get the same opportunities, which is a shame. And that it shouldn't be that way. And likewise, when we look at leadership and culture, only the certain type of demographics were given certain opportunities to be in that sort of, I don't want to call it privilege, but essentially they're, to be on that sort of platform. Likewise, in the industry itself, when we talk about events, unfortunately, the culture that we had where it was, at certain times, the drink and things on those lines, and essentially behaviors were accepted, it's just not responsible and not right. So, so like I said, the website was created. There's going to be different task forces. There's chapter 2 on Monday, which you could be, listen to at 1:00, which is head up by, as I said, Tracy and got Monty as well. Huge influences, and there's so many stakeholders that have been a part of it. Kevin Roberts and so on. And it's been great to have a platform where you've had lenders, brokers, self-employed people, stakeholders within industry coming together with a common objective to make it an inclusive and a fair place.
We like that. So just that's in the Working in Mortgages website that they can listen to those podcasts, isn't it? So if I just give that away now, in case you haven't looked at it, it's workinginmortgages.org.uk. Have a look on there. You can see the previous episodes. I'm on there now. I do see. I mean, I realise everyone's hearing us and not seeing us, so we are a little bit more diverse on our panel than probably the industry represented, which is a good thing. So I was very conscious when we're coming on here that, we are, the 2 people from Saffron are, no offence, guys, but white middle-aged men, straight men at that. I do represent the LGBTQ community, plus community. Nick, what's your heritage?
Yeah, so I'm mixed. I'm 34, mixed race. My dad's from Portugal and my mum's from the Caribbean. I recently did a DNA test, and I'm more broader around the world. Naturally, being from the Caribbean, so I've got Ghanaian, Chinese, Persian, or Bangladesh, and so on. So yeah, I've got quite a range demographic. So yes.
Yeah,
Shakina?
obviously,
just for the benefit of the
I'm
audience.
from the women's angle, so I'm a female. I am black, so I'm of Ghanaian heritage. Also quite young, which isn't as common in the industry. I'm 33 years old, but obviously I'm on the other side of it, reporting on the industry rather than working within it. But I'm still sort of engaging with people on an everyday basis, and be standing out a little bit in that sense.
I'm going to come to you in a little while, Shakina, because I'm actually interested to hear from your industry, because we're going to talk about the mortgage and brokers industry. I think it'd be nice to hear from you and what you think about your industry, because I think I know the answer, but we can have a good chat about that. But okay, so let's look into the report a little bit. But before we do that, Phil, you have been, I might be wrong here, but have you been challenged within Saffron to look at your
I
own?
mean, I've been sort of representing the Saffron within IMLA. So we had our first IMLA workshop earlier this month, and you know, let's be honest. Let's call it out. The industry, our industry, is there's too many people like me and Tony in senior positions. There, white middle-aged men, and that's not healthy.
Can I ask you guys? You've been here. You've been in the industry a long time, even more than
Yeah.
Nick has. So I'm just going to come to you. But why? Tell me why you think it is. Tell me why, as in your position and going through
Yeah.
30 years in the industry. Tell me why you think that is. I mean, I'm just intrigued because
Yeah, no, I
I
mean,
work in the sector, so I know what other people's opinions are. I'd be
I
interested
think,
to hear yours.
yeah, there's been a lot of unconscious and possibly some conscious bias over the years, and looking back, yeah, I've been I've got to where I've got. It's been easier for me than it would have been if I was female, or of a different sort of heritage. Yeah, so I probably had it a lot easier because of my white male privilege. Let's be honest. So, but it's not right. I've got children. I've got 3 children, 2 daughters. I don't want them to come into a work environment where they have all the barriers that, looking back, I've seen where women have to work 10 times harder to get where they need to get to. It's not right. So I think it's important for us to call it out, and when we spot things, we've got to be brave enough not to brush it under the carpet and say this isn't right. It needs to change. So it needs to. We need to be part of it, and not just, ignoring it. Tony, I don't know whether you've got a different view.
Tony, I'm going to ask you a question, actually, Tony, because this is
Yeah.
really relevant to your role, because you're a recruiter. In your team, you have a diverse team within your BDM team and within the support team. You have a very obviously. It's going to take time before there's, as Phil was saying, it's going to take time for those people to get up to those levels. So the females in your team, those of colour, those of different sexualities, they are coming through the ranks. So, but do you think you're still behind industry as a whole, business as a whole? Do you think it took a lot while for the mortgage industry to step up and realise that you were part of the problem?
Yeah, I think so. Look, I mean, even I've been obviously in financial services now 36 years this year, which is frightening. I've had too long. I just need to bloody leave. Sadly, I can't. So then that's another podcast on its own. The benefits of prior pension planning. So no, I've seen incredible improvements. There are far more women in, and probably more women than people of different heritage in senior positions now, and there's far more females advising. It was a really male-dominated profession, and that has really changed. And Phil can probably see this over the last decade. It's gone from a mid sort of 40s to 50s advisory age range to a group of young males to start with, but there's an awful lot of quality young females coming through, and and what I like the industry is recognizing is awards for women. There's a women's recognition. There's lots of things like that really starting to drive the envelope. So it's just look, the mortgage industry is slow at most stuff. All right, let's not just think it's slow at D&I. It's slow at technology. It's slow at upgrading itself. So I think, but the thing is, everybody is now in those influential positions talking about it, and Phil's quite right. We very recently didn't let something go under the carpet, and we raised it. It was a bit of abuse against one of my female BDMs, and we raised it, and action has been taken against that individual by their network, which I was extreme. There was no question. It was dealt with, and I was delighted by that because it shows that we are learning from this. And as Phil said, we've got to be part of the solution, not the problem. And that's the key thing for us.
Skeena, you work with both brokers and lenders and everyone else that influences our sector. What do you think the issues are? Do you think the sector doesn't feel welcoming to more diverse employees? Do you think the report, and I do this all the time. So we look at, inclusivity in images, making sure that, you've got disabled represented, you've got colour represented, you've got, there's so many things. It's ridiculous that we have to put this in place because it's not naturally happening. I know that. But do you think, looking in on the mortgage industry, do you feel like you would be welcomed? You would be welcomed in as a female, as a person of a black person? Do you feel welcome?
Yeah.
Do you feel like there's no resistance to go into the market, or do you think that needs to improve?
I don't think there is any resistance. I think the industry has quite a low entry requirement in terms of what you need to become a mortgage broker, for example. You don't necessarily need a university degree, which is what I've heard from a lot of people in the industry. You just need the qualifications and the right sort of attitude and everything like that. But I think when you look at the industry, it doesn't look like one that if you don't sort of match the people who are in it, that you could fit in. And so there might be that barrier. It might come from the people within the industry reacting a certain way to those who are entering, or it might be those on the outside who might not feel like they would fit in or feel like they want to join. Also, in a lot of communities, it's not really a job that is considered. So it might also be a lack of awareness that this is a career path as well. I think there are quite a few things that are going on that might make people feel excluded or exclude themselves from the industry. I'm not sure a lot of people know what a mortgage broker does or the career trajectory of a mortgage broker or even in the lending side or anything like that. I think with the lenders, you think of the banking industry, the finance industry, you think of a certain person. They're actually usually sort of slick younger white men, like slick suits and shiny shoes and everything like that, and that still doesn't fit certain demographics: women, people of color, people of different sexualities, disabilities. So I think there are a whole load of things going on. It's kind of on both sides, but also there is, I guess, when it comes to recruitment, I wouldn't know personally, but from what I've heard anecdotally, when it comes to recruitment, just generally, people will want to sort of recruit people who look like them, match their image, match their culture. And so that tends to breed a certain person that keeps becoming included and ends up with a certain kind of person excluded because they don't tend to fit that mold. And it just takes unlearning, I suppose, and having a wider opinion and a wider sort of viewpoint on things and not thinking of things in a strict way and just broadening the mind and just looking at things from different angles that you might not have considered before. But I think generally the industry is welcoming. There might be a few issues here and there, but for the most part, everyone's been in the industry for a long time. They all know each other really well, which actually on its own can be hard to break as well. But because everyone does interact so much and there is that relationship building and networking, it can be quite easy in a way to get involved and feel included. But yeah, it's a multi-layered thing. It's quite hard to come up with one sort of overviewing
Yes,
answer.
very difficult. It's a very difficult sector. Sorry, Tony, you put your
No,
hand up.
I was going to say, just back to the whole look. I think we can all be honest and say, well, for those of us who are in the mortgage industry, none of us vocationally got out of bed or at school and went, I want to do this. The whole industry, hundreds of thousands of people kind of accidentally fell into doing this and then realised it's actually quite nice and can be fun. But it all stems back to a topic that I'm very passionate about, and you know this, Jake, so I always bring it up: education in schools. If we actually educated our children as to financial education, then you might get more of them going, I could do that. I could be that role, from different ethnicities, from different backgrounds, going, that's all right. I like that. I enjoy this kind of work. I enjoy this, and getting into this industry earlier rather than the mould that we're having to break, to pick up Shakina's point. So that's all. I'm just passionate about this lack of educational literacy in the UK.
I'm just so you know, Tony, and you won't know this before, and I'm making this known on the podcast because I want it to go far and wide. I'm working on a project with a client at the moment that is lobbying the government on financial education in school as a subcurricular activity. So watch this space. It was actually an education company I'm working with, so I've got good backing. So yeah, keep an eye, guys, because I am working on that. Sorry, Nick, you had something to say on that?
Yeah, no, look, I think this is the thing. When you have this conversation, as I say, Rome wasn't built in a day, but the fact is we're having this conversation which we would have never had
Yes.
3-5 years ago, fundamentally, and that's the fact. That's the benefit, and this is the beauty about the industry which we work in, especially in the mortgage industry and the financial industry. Is I'm dyslexic. I left school. I didn't go to university, so in terms of my options that were available, and likewise when you actually speak to people, that, like as Shakina mentioned, you don't need to go to university to come into this industry. You just need to have a level of dedication, understanding, and that essentially it's down to be able to provide a customer service and understanding, and that's just through talking and so it's a great industry for anyone that's sort of leaving college or whatever their circumstances will be, whether they pick up whether they left college or 30 or later on in life. Fundamentally, you could come into this industry with relative ease. Now, in terms of the industry itself, I think it's really important that how we move forward. So whether that's a case of, look, if you see anything inappropriate, that you call it out, as Tony mentioned, end of the day, they stuck by their staff, and by having that and seeing the consequences, that individual and that network, that individual fundamentally, regardless of if they can't, submit business to Saffron, as essentially not whole of market, and that has a huge impact. But it's only by doing that and you having consequences that you're standing by your staff, and it's having a massive impact. Likewise, I speak to a lot of people as part of the role, and essentially going, look, when it comes to recruitment, it's very difficult because we're not in London, we're not in the city areas to recruit with a certain, to open it up. Or they've said because they've got a set of predominantly white male, and then they're conscious that if they employ a woman or someone from the LGBT community, how do they fit in? And that was part of my argument. Is it's not about how they fit in, it's fundamentally about the culture that you need to change within your business, not regardless of and that's the mindset which we need to start changing. And likewise when it comes to the ARs, as I mentioned, I keep going about the self-employed and the role in which they play. They're part of networks with no HR, so when things do happen, they haven't got someone to turn to, and essentially we need to be looking at it and going, right, if things do happen, how we could support everyone regardless. So that's my I guess my plea, so to speak, because I'm not, and I appreciate when we talk about diversity, when we talk, some people will switch off, and it's not for everyone. I'm not going to say everyone's going to follow this path, but fundamentally, it's the ones that have the ability to make a voice or have a voice, use that.
Can I just make one comment to add to everything everyone said? Is some diversities are easy to see, hear, and things like that, but sometimes they're not seen. People don't realise my heritage. A lot of the time, my sexuality doesn't come out across, but also I don't drink. So when I go to events, you mentioned events earlier, Nick, when I go to events, I feel like an outcast because I don't drink. There are people that don't drink because of their religion or because of their culture. And I felt that for the first time and felt pressured to have a drink. And for the first time ever, I thought, now I understand why these non-obvious diversity issues are such a big thing. Because for the first time ever, I looked and went, okay, this person who's shoving a drink down my neck didn't know that I was gay, so was making homophobic comments at the table, and then tried to stick champagne down my throat when I said I didn't drink. And I don't drink for medical reasons, but that's irrelevant. I could have had any religion, I could have had any reason for that. And this was in this industry. So I just want to give you an idea of what it feels like when it's not obvious. As we've talked about the colour of skin and all these things, and yes, I suppose some effeminate gay men, you might spot them. I'm one of these people where people go, not quite sure. And that's fine. And they want to come and ask me. I don't get insulted by it at all. You want to come and ask me my sexuality, I'll just tell you. I'm not going to hide it. But I'm not going to run around with the rainbow flag stuck in my ear hole so everybody knows, because that's not. I don't need to. But it's that unconscious bias. You talked about that, but also the non-visual cues. And I think that's really, really important that people pay that in mind.
No, that's a really good point. It's a really good point.
This topic we could talk about forever. We've gone over time because we are so passionate about it. And do you know what? It's so nice to talk to so many different people about things like this. And I think, you know, we've done it again. I'm gonna go through the whole list of podcasts on that website because I'm intrigued to hear everyone's viewpoint. So I suggest you'll do so. Let me just go back to that website. Don't forget to give you it. It's workinginmortgages.org.uk. Have a look. Really great site. Have a look and listen to the podcast there on there. And it's only, I mean, I want to talk about that forever, but we're going to have to end it there. So it's just now a massive thank you. Shakina, Nick, thank you so much. I know that topic was important to you guys, but also for the others as well. You've been a brilliant contribution to the podcast. I hope you'll come back later in the year and join us again.
Thank you.
Absolutely. Enjoyed that. Yeah.
Thank you. Brilliant.
Please do.
Brilliant stuff. And Phil and Tony, thank you as always. Just for the sake of the listeners, I don't know where you're listening to this, but we're available on Apple Podcasts, Google Podcasts. We're now on Audible. We're now on Amazon Music. And you can now ask your smart speaker to play SFI Not So Live podcast, and it will play the latest episode, and it'll let you go through the series. I'm a little bit pleased with that. Right, on that note, we're going to let these guys go back to work. It is a Friday after all. Thank you for listening. Well, I hope you tune in again. Don't forget to sign up for the channel so you get notifications. And one last plug from me, SFI Live is back finally. SFI Live is back, and we're back on the 1st. So next Wednesday, if you're listening right now, but which you're not. So next Wednesday, the 1st of February, we're back, and we've got quite a few topics on there as well that we'll be dealing with. So do join us for that. You'll find the links on Saffron's social media channel. So from me, it's a very big thank you for listening, and goodbye.
Bye.